The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Monday edition. Monday the 8th of June. Sorry, oops about that. Most importantly, what we're going to be looking at here is what's going on in the market after that next session on Friday. Dow was down, S&P was kind of unchish, and the Qs were up. And of course, the IBB, based on the Regeneron lead, had a really good day, but it was really just a single stock that gave it the impetus to move to the upside. Now, when I'm looking at the various indices this morning, we'll do this one at a time. First of all, I want to say nice lineup we've got here. And we started off at 8 o'clock with John Logan, went to Larry Pesavento, went to Tom O'Brien. Now I'm coming in. And of course, we've got programming right through the day. So this is going to be one of those days where the opinions that you get are going to be based on all the work that we do, the different techniques that we use, and you'll see which way the bias is leaning. At this particular point, my bias is towards the downside. I believe that we have made a top in the Dow that is a pretty important top, at least short to intermediate term. You're looking at the E-minis that made a peak F in the Chapman wave at 2134 back on May the 19th. And we've come down to the 2080s. That's a reasonable dip, but look how much time it's taken in days. It's taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, about 18 sessions to get here. So you've used up time rather than just price alone. There is some price, but not as much as you would expect. So that's saying that there's still some internal strength. And the weekly chart has made a peak E at that 2134 high and closed under the 9-period exponential moving average. The MACD turned down, stochastic turned down. I had no choice but to put a down arrow right there. And what's really important about this particular down arrow is that it makes this week, the close this week, was what I had said to subscribers on my opening call, is that we had gone to a sell signal in the weekly chart of the Dow. S&P, I can't remember now because it was just on the cusp. S&P itself, let me just do this now. I'd like to give you accurate information as to, yes, the S&P, I hadn't really changed that plus sign to a down arrow. I prefer, although that was a second week close under the 9-period moving average, I don't think there's a rush to do this. I believe that I will be putting a down arrow in this week on Friday to say that it's a sell signal with a chance that it's going to automatically be upgraded to a sell mode if the S&P closes under 20.72, 20.68, that area. I'll have to see just how the technicals are all around. Meantime, back at the ranch, let me just run the numbers. The Dow's down 24 at 17,824. The S&P is down 4.32 at 2,088. The comp index is down 15 at 50.53. A lot has to be the Apple announcement later today. Do they get all 5? I guess they want to contract all 5 for the music part of their program. All I'm doing is looking at the chart, and there's a declining triangle, a wedge formation. It dipped a little bit under it on Thursday, dipped under it again today. The MACD and stochastic already. I have to tell you, all I'm looking at here in Apple is that I think it's in a sideways range, that we're on the way to the downside probably now, making another cup attempt, and that will turn into an arch formation if, in fact, Apple at 128.51, down 11 cents, closes Friday under 120, just there. Yeah, I think 126.50. 126.80 to 126.50 is a support. 2 points low. It's not a big deal. We'll see what happens. But that monthly chart is still acting really well in terms of price. But if I move this away, the 120-minute chart, you'll see that just like the other indices that I'm looking at in the monthly charts, there is a bit of a divergence here between the stochastic pulling back, still at 87% and good, but it is starting to pull back. So we just need to watch this closely. All right, we got gold. Gold itself, gold is down. No, it's at 140. It's down from its high earlier this morning. It's having a tough time. And one of the reasons is I spoke on Friday about that residual strength that I saw in the dollar, but it's only residual strength. It doesn't mean that it's, at this point, if I'm looking at the MACD and stochastic, if I'm looking at the weekly chart, it is only the monthly chart that really has internal strength. And at this particular point, it really looks as if the dollar is struggling. And that there's a chance if it takes out the low that was made on Thursday, I think it was at 94.65, that'll be a big negative. That's going to help EUR USD, help the euro currency pair. Although that needs a lot of work itself. I have to say, I've spoken about the currencies. I've spoken about the gold being in a trading range, and until they decisively break that range, you know, you can get carried away looking at, is it good, is it bad? All it is it's kind of neutral right now. I don't see any strength that I'm willing to trade in gold at this particular point. A couple of stocks might form some strength today or tomorrow if the dollar actually does weaken. We'll see about that. Most importantly, the euro-dollar currency pair needs to hold 1.11. No, it's going to say 1.1048, the low of Friday. And on the upside, all it has to do is take out the high of Friday, which is 1.1279. I keep saying 11. 1.1279. And all of a sudden, you've got yourself, you'll see it in the 120-minute chart. Look, you've suddenly got yourself in the 120-minute chart, a rally that wants to test the high. Yep, the highs of Friday. And we'll be watching that one closely. It's kind of important if I include the USD JPY, you'll see something interesting here. Just as the dollar had great strength and then pulled back sharply, so the dollar-Japanese currency pair is holding very well. So in a sense, what you've got is a little bit of a mixed market, the same as we were looking at on Friday. We looked at a weak Dow, kind of okay S&P, and a pretty good QQQ, the NASDAQ. Now what we're looking at is the same sort of thing in the currencies. The dollar is holding okay, not that great, though, in terms of the action today. The euro-dollar currency pair is holding okay, but it needs to show some strength towards the close of the day to be able to re-tackle the recent high, recovery high. And if you're looking at the Japanese yen dollar currency pair, it's broken out. It's in leg C in the, I'm calling it C for now. I've got no reason to call it anything else. In the weekly chart and the monthly chart, it's very strong. Turns out this is one of the stronger currencies, USD JPY, out of the three that I'm looking at. All right, let's go on. We want to look at high-grade copper just real quickly before we go to a break. High-grade copper, it's not acting well at all. It's made that A pattern, uppercase A, straight up, straight down in the daily. The weekly is holding okay, but it really starts to fade. It's at 2.69 right now. If it goes to 2.650 in the next 2 days, you got to watch out because it's underneath a very important left side low bar in the weekly chart. Monthly chart, I don't even want to talk about it. It really looks terrible. So that's that. And I'm running out of, that's right, TLT before I run out of time here. I want to get to the TLTY. The pattern that we're looking at, I'm choosing the middle. If you're looking at my charts for the first time, maybe you're looking at my charts, you'll see the left side is the daily chart or whatever I'm looking at. The weekly chart is in the middle, monthly chart is on the right, and then I'll sneak in this little 120-minute chart here. There's that A pattern that I was talking about, uppercase A, straight up, straight down, looks like an Eiffel Tower. Now we've got a little mini A over there, or arch formation. And if it takes out the left side low in the TLT of 117.20, that's negative. Now let's just look at this. We've got the TLT at 117.93, up 33 cents. And in this particular instance, that's the 120-minute chart. If I open this up, you'll see that what we've done is we've come down very sharply. We made a cup formation, which failed, which then turned into inverted A formation, which made a little bit of an A formation here. It's a big deal if there's a close below 117. That is going to be very important. And we'll just look at the TBT as we're about to go out for the break. Did I hear music? Did I hear music? No, I didn't hear. I guess not. Okay, so let me just go. No, I didn't. Still early. Okay, this is the 120-minute chart. You see the 120-minute chart of the TBT, which is the ultra-short Lehman 20-year Treasury bond. And if you look at this cup formation here, there's a little bit of a handle being formed. If there's a decisive break above 50.57, the TBT will suggest, and now I'm going to move it away, that 200-period moving average and the 9-period moving average in the 48, high 48ths in the daily chart is going to become a propellant for a move into the 51s. That makes the 51.20 to 51.40 an area. Is that correct? Let me just double check. Yep, 50.47 was the high on the week of the 12th of December of 2014. So I'm watching this really closely, and I'll tell you why. Because my contention has been that regardless of balances, what we're looking at is the Japanization of our bond yields. And if I go to all the factors that I've been looking at for so long, like the retail index, like so many of the indices that suggest that we're actually in a little mini recession right now, it's kind of rotational, then I'm going to say to you that even though there's some good news that's been coming out, I would not be surprised if the Fed is unable to move, that bonds themselves just do this based on other factors, that is, raise the yields a little bit. But in fact, the Japanization of our bond yields might be here for a little bit longer. And that means we could be coming back in yields fairly soon. I'll talk about that a little bit more in a moment. I just had a couple of questions in the den. Let me just see. CAF, Peak wants to know CAF. What is CAF? Oh, that's the MS China A Shares Fund. I haven't got this notated. Okay, so that's AB and then AB overlapping with CDE. Okay, monthly chart E. All right, I'll do it during the break. We've got a break coming up, folks. Basil Chapman, Tiger Technicians Hour. Dow's down 21, S&P's down 4.5. I'll be right back. Stay tuned.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back, and what we're looking at here is the CAF, which is the MS China A Shares Fund Inc. Let me just check something here. Let's see, that's not good, that's good. No, that's not good. That's good. I'm just trying to get rid of an echo. Okay. So CAF is trading at 37.61. This is the MS China A Share Fund Inc. And it went to a spiral peak A right there, pulls back, starts a brand new AB. 30.84, 30.82. Yes, I'm right. AB, C1, C2, pulls back. A, B, C, D, E goes to a top at on the 27th of April at 36.68. Pulls back and then starts a brand new move to the upside that goes right there. Always identify the lowest, most obvious low bar, and that'll give you a good start there. Now we're in leg D. It is amazing how many stocks that are very important have rallied to highs are in D's and E's and F's right now. So the CAF weekly is in D, the monthly is in E, and I'm going to, well, what to do? I don't know what to do right now, because if you're along, I would not advise you to be buying right now, but I don't know if I want to actually tell you to short, because China's been showing a lot of strength. The Shanghai index has just been climbing. So I'm going to suggest two things. One is that if you're holding, then you can have a core position that you will just, not even a core, just take keep a core, and just like 1/3 or less would have a stop of 36.39 to 36.08. Somewhere in that area, you might want to take some of it off. Why? Because if there's a pullback here, there should be a pullback under 35 into 35, 34 area. If it's going to continue higher, it should just pull back a tad to 37.18, maybe 36.90, and then move on to a higher high. And that's going to help because the weekly chart is still very strong. Monthly looks great. I don't want to mess you up at all. You got into the stock. All I'm going to say to you is that in terms of risk reward, I would lighten up a little bit. I'd have a trading stop as it moves higher on some part of the position, which you could plan to put back if it closes under 35 to 34, 35.5 to 34.5 area. That's an area that's quite important to hold. All right, hope that helped you. And now there's something else that's going on in this market. Technically, once I get my signals, there should be a pretty good reversal, if it's a reversal, or a rally if there's a rally. At this particular time, what I am seeing is that there's some buying in the volatility index, not enough to say, hey, everything's turned, but it is a start to see that we're getting some recognition above the 200 period moving average, which is at this particular point 14.68, that coral color right there. Sometimes it looks gold, sometimes it looks coral. All right, well, there it is. And the weekly, it looks gold. And what I would recommend is keep an eye on this, because if the VIX index doesn't do it today, but tomorrow spirals above 1565, that's often a leg D, which could turn into a peak D. It doesn't happen often in the VIX index, though. We've hardly had any Ds. So just we're going to keep an eye on this, because if the VIX starts to trace and close in the high 15s to the 16 area over the next few days, that's going to suggest that we are going to be coming down quite sharply in the market. So I'm watching it very closely. And on the downside, all you need is at 15 right now. A close below 14.11 says, forget about that VIX. It's not doing anything but telling you that there's buying pressure. Now, a couple of things that I want to look at as we're going through the different indexes. Look, the XLF, which is held pretty well so far. It had a couple of great stocks like Goldman Sachs, and JP Morgan. At this particular point, the XLF is suggesting at 24.74, only down 5 cents, that it's kind of struggling. That leg D it should have made very easily last week. And that should be gray. Yep, in the gray peak C underneath the major top of 25.14. Not a major top, but a major recent high. I'm looking at this and saying, gee, you're really struggling. In fact, with rates higher, bonds are suggesting that the banks should be doing okay because they really do like higher interest rates. So I'm a little mystified as to why. I think it's later that the XLF, later meaning later in the year, the XLF really has a fabulous run. At this particular point, it's kind of concluding in the monthly chart, a very big move. That's a move from October. No, that's a move from February. 22.89 to 25s. So it's a 10% rally. So that's pretty good for the year. Can you call it for the year? Because December closed 24.73. Exactly where we are right now. So there's been no change. Very interesting. After all that fuss. All right, we've got a break coming up. We want to look at some stocks in the break, and we will also, at the same time, talk a little bit more about the IWM, and we'll go into some of the more esoteric stuff that I like to look at. We'll be right back. Basil Chapman, Tiger Ignitions Hour, Dow's down 35.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Oh, I said I'd finish up the TBT. Let me just go back to the TBT right here. All right, TBT, yep, the 200-period moving average is going to be, this is also very important. The 9-period is about to cross the 200-period. Usually when that happens, that gives you a little bit of a bounce. A lot of people think, oh, great confirmation. No, no, no. That's just saying we are well on our way in this particular move up. Now you've got to be somewhat careful until there's a retest, and then a breakout to the upside will be very good. So this is going to be a very important moment for the bonds. 120-minute chart really has that peak C. It's not even a C1, C2 here. So there could be just a little bit of a pop-up, and that means that the TLT can go a little bit further down, and then it might have a little spring to the upside. Oh, I said last week was a really important week, and it was. And because of the closes and because of the action last week, there are a lot of things that happen. I've got sell signal to sell mode confirmations. I've got sell signal confirmation in the Dow Weekly. The IWM was okay. It went just above that trend line resistance, but it's just kind of stalling here, which often happens when you get this circle formation, which I call the Chapman wave, stalk leg formation, leg body. But this has gone a little bit too long, and is suggesting there could be a failure. In fact, what I'd like to do is just for clarification, not to give too many other implications, is just to show you something here that there could be there. That's what I'm afraid could happen in the IWM. If the IWM at 125.11 at minus 29 closes underneath 123.70, on any day this week, is going to suggest that the weekly chart will close under the 9-period moving average of 124.23. And then there will be no leg, body, and neck at all. In fact, there'll just be this arch formation failure pattern. And the QQQs? I still believe that Apple's such a big part of the QQQ that I need to look at Apple, and just to confirm once again, I don't know what the news could be that's going to spiral Apple at 128.26 down 39 cents into the 130.75, 131.30 area, which would say, oh, great, now I can try to retest the 132s. I just don't see that right now. I think we're coming down. I've spoken about that before, and that's going to impact the QQQ series. Now let me go to a stock that I had. Let me see if I can swing around. The question was CBRL. That's right, CBRL. And CBRL is Cracker Barrel Old Country. Now, I can't believe that I kept forgetting what it was, and I even did a little analysis earlier today, and completely forgot to look. I just look at the price. Believe me, it's just the way it is. In fact, that should be a down arrow there, and this should be an inverted carrot right there, right there. Oops, wrong thing. It should be right there. And now look at this. When I look at the Cracker Barrel, which is really part of the defensive group, part of that whole thing with that Clorox and Heinz is not there anymore, right? But that whole category of certain foods, Procter & Gamble, certain of the cosmetics, certain of the healthcare, I'm looking at it and I'm saying, it's defensive. Is it acting like the T-bonds? Is it acting like it's just, or the currencies? Is it just stuck in a range in the weekly, just trying to get to maybe a 50% level, 150, and then come back again, make that arch pattern? I think that's really what I'm looking at. I think we're looking at the potential for an arch formation failure pattern in Cracker Barrel. Now, I can't remember whether the read was long or short, but my analysis right here says that it's holding well. If you're long, I wouldn't do anything about it if I was long. What I would do is once again, I'd have that same philosophy that, because I'm looking at it as a retracement failure mode, that it should very soon start to turn down, and therefore I'd just be prepared for it. So if you got a core position, I wouldn't make my 1/3 position here too tight. I'd give it some room. And if at 147.55, if it's able to get to 148.90 to 149.30, anywhere in that area, that would mean that I would be able to raise the stop on 1/3 of my position. Try to keep your core position, but raise my stop on 1/3. Why? Because if it was to turn down, I want to see how it holds under the 9-period moving average of 142. I'd like to see if it's able to steady itself above 140, not get into the 130s at all. Steady itself in the 140s and then bounce, maybe not even get to 140, but at 142.50, which is the 9-period moving average in the weekly chart, it suddenly turns around from a little bit of a pullback and rallies again. That would make me very positive, and I'd immediately try to say, hey, the pattern to watch now is this cup formation that's going to fight the arch formation, the lowercase h pattern. Remember, we're only about patterns here, and there are only 3 patterns, straight up, straight down, that's 1. An arch or an inverted V, that's 2. Or a cup or a V shape, that's 3. That's all there is. Try to define it, try to narrow it down to just those. Get your eye used to seeing them. And at this particular point, the daily chart of CBRL, trading at 147.63, up $1.77. See, the reason why I don't want to say to you, just slap in a 1/3 stop at 144.52 is because I want to give it a little bit of room here. I'd give it 143.10 is the area that I wouldn't even take my money off. I'd say I have a mental rather than a physical stop. I'd say you come back under 144. I want to see how you behave, because the core position could be a great position not to mess around with at all as a defensive play in this kind of a market. If it begins to roll over and it breaks the 142.50 area, that's different altogether. Then at that point, I'm going to say, take off 1/3. You might want to put it back on the retest, lower down. I'm only going to say lower down. I'm not going to say 140 to 137. I'm just going to say, hold on, let's look at it again. Give me another email or call, and we'll look at it. Meantime, if it's able to get, boy, at 147.43 in this market, if it's able to get into the 148.80s or 149, even for a smidgen, even just to touch that level, that'll start to produce that cup formation, a very positive thing. That's why I don't really want to mess around. If you're in it, you're in it. It's not a short, not at this particular point. Okay. And, we've got George in New York. George, how are you?
Basil, good morning. How are you today? Basil?
I'm very well, thank you.
Good. Basil,
yes.
I think I missed what you were saying on TBT because I was looking for an entry onto that.
Okay, so you know what, I believe, am I wrong? Yep, we've got a break. No, we don't have a break. Okay, I'm a little confused with those breaks today because I can't swing around as easy as usual. So, okay, George, this is what I'm looking at. If I'm correct that, yes, there is some kind of a rally in the yields at this particular point, but it's going to be fairly limited. Wow, give me a second here. While we're talking, I'm getting out of this particular chart here, which is a very short-term trading chart, so I'll close the window. What did I just do? Close workspace. There it is. And I'm going to get this workspace here because I want to look at the T-bond yields together with you. I want to show you something. So coming up is the 30-year T-bond. The white is the 30-year T-bond yield. The gold color is the 10-year T-note yield. And the cyan light blue is the 5-year T-bond yield.
Okay.
You can see I drew this in for subscribers. I wanted to show a little while, about a week ago, I showed that bonds already, they've been there so many times. They were back there November of last year, August of last year, May of 2013. So it goes all the way back. But the first time the yields broke lower was September of 2011. So we've been there for 4 years. So as I'm looking at this particular chart formation, if you look, you'll see that most of the time on the rally side, yields, 30-year yields have gone to a D or an E and then pull back very sharply. There was one time it went to an E and then a slightly higher F and then a 39.40 at 74. In January of 2014, made a G, and then it plummeted down. Plummeted, when I say plummeted, it went from 39.74 to 22.26. So this is nothing that we haven't seen before. Now, are we looking at a steepening of the yield curve? Are we looking at an inverted yield curve? I think at this point, all we can say is there's a steepening of the yield curve. That's usually where the market gets a little bit nervous, but at times the market has actually rallied quite nicely when the yields have gone up. So I want to separate what the market can do to the yields right now. So if this is a peak D, and there should be maybe at best a modest peak E to come, maybe at 32, 31, or maybe a little higher, and then a deeper pullback, then now this is where I could be completely off the wall wrong. I just want to mention that if I'm looking at, now I'm going to go back to these charts here to show the yield in a slightly different perspective. This is so the fact that we've broken to higher highs, for now I'm going to give it the benefit of the doubt and call it leg B, possibly peak B in the 30-year T-bond yield at 31.03. Down 8 cents. And I'm going to put in a down arrow right here because all the contingencies are there with the MACD and the stochastic. I'm going to put a plus sign in. No, I can't because there's no H, so it has to be an up arrow. So an up arrow. So there's the up arrow. And now I've got A and a B. At the same time, I've got a little cup formation. And cups have a potential to double top. So I'm going to put that in with a line across. And then I'm going to show you what I'm looking at. Because the implication is that if you're getting the TBT, now I'm going to see how it matches what I'm looking at if I just go to the TBT for a moment. Okay, you can see that the TBT has gone to a peak A. It hasn't gone to the B just yet, but it's matching very well the TYX, and it should, because the TYX is the 30-year T-bond interest rate, and the TBT is the 20-year. It's a difference of 10 years, but it's still a longer-term rate.
Yes.
The stochastic's at 81, which is good, and the MACD is just cross-positive. So I know that you like to look, you are prepared to go shorter term, but you do like to look longer term.
Correct.
So at 49.98, you have the risk that if it takes out 48.03 support, moving average support, it actually could retest the low that was made just a week or so ago of 45.81.
Oh.
What you really want to see is a decisive move above 50.57. Now, if you get that, it starts to extend the weekly chart leg D. The MACD is good. Stochastic is at 78%. It's not at 80%. But so far, everything is looking good. But at the same time, this is one of those things where it's very difficult. You've got the Fed on one side, and you've got the real rate, which is based on economic factors and other things with the yield. And you've got a third aspect, which is just pure chart formations. And the monthly chart is improving, but it's still a lousy-looking chart. So if you are prepared to put a stop in place, to just start a position at 50.05, realizing that you're actually now asking for a lot because there's no resistance to the upside near term, you've got to go all the way back to the 3rd of December of 2014 when it hit 51.53 for your question is?
What about a compromise? And let's say it retraces back to the 30-week EMA on lighter weekly volume. Would that be an entry, which is about 47.19? So let's say 47.50 around there, 47.25. Because I'm looking at the last few weeks, there was a lot of volume going in, and now it's above the 30-week EMA. So I'm thinking if it retraces down to about 47 and change, would that be a point? And then I definitely have to put a stop loss, of course, because of what you're saying with the free money out there. It's an absolute given that this could drop, of course. So that, which is, point is well taken.
Yeah. You know what I would suggest, George?
Yes.
Let's see how the weekly chart acts and reacts with the stochastic. If it had to pull back below 48.50, that's a 1.5 from here.
Yes.
My guess is that the stochastic will start to drop to about 76, 75% in the weekly chart, and I then want to see how the MACD is holding up. But I like that strategy much, much better. Except for one thing, if you are going to put a stop in, then the only other way I would trade it is to buy it right now at 50.05, because to break out, you need less than a point to the upside. Whereas if it pulls back under 48, you're going to need a lot more, and now you're looking at a greater risk with that stop. Hey, you want to hold on just 1 second? There's something else I wanted to cover there. Can you hold on?
Thanks. Yes,
okay, I'll be right back, folks. Basil Chapman, Target Admissions Hour, Dow's down 40. We'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Folks, we're back. So we're right here, and we've got George from New York, and I wanted to look at the bonds themselves. So the monthly chart of bonds has made a peak E. I have to call that E now. There's nothing else that I can call it, right? That's an E. That's a serious chop. I have to even put a down arrow in there. You know, I'm beginning to think that we could still go a little further with the TBT. Mm-hmm. So here's my suggestion. This is what I want to look at here. Even if there is a bounce, I think the buys, just at least for the next maybe week or two, could be a little bit further for yields to scare everyone. But if the Dow continues low, which I believe it's going to continue, the general market and the Dow, then I was thinking that money would come back into bonds. That's my only concern. So maybe your idea is good, because my other idea was just to start a little position here, and you'd get yourself a trade, and you can just raise your stop, and that'll be much easier than waiting for a pullback. Right. You know what I mean, to the 47s, right. Because at that point,
I do agree with you on the.
Will get stopped out because it's on the way down.
But I do agree with you on the daily chart. Now that I look at it, though, because you are right, and it's about almost a month separating from May 12th on the daily, and it does look like a small double top to me as well, because we have the first rise. There was a lot of volume, and now, of course, the second, the right hand, we have less volume. So it looks like it's a traditional double top setting up. Yes. You see what I'm saying?
Now, but it is above the 200 period moving average.
It is. Yes,
and that's a big feat to be able to do that.
That's true.
So that's why I'm suggesting maybe, you know what, George, I think you watch this close enough. Why don't you take a small little position now?
Okay.
And that's going to tell you whether you can add to it or not. I think that because you follow it closely, and you'll understand the characteristic of the pullback up or down.
All right. I appreciate it. Excellent, Basil.
Okay, very good. Thank you for calling. Good question as always.
Have a great day.
George in New York, have a great day. So let's do this as we're about to wrap up, and we're about to hand it over. Now, what I want you to do is this. In the TBT, we did a little analysis, and the chart just showed that it wants to move above the 200 period moving average, but so far it doesn't give you a sense of the design is a sine wave and says the 5130s could be resistance. At the same time, you've got 48s as the support. All right, that's that. Now what I want to do is to quickly go to the VIX index. And for my subscribers to my opening call, I did a lot of work this weekend, and I showed why I'm considering that the Dow has quite a deep pullback coming up, why the S&P and the other indices will follow. At the same time, there's residual strength. We've got to see how that filters out over the next couple of days. But most importantly, the weekly chart right here is suggesting that on the VIX index that you've got a leg C. That's the first time we've even had enough gumption, enough strength to go up for 3 peaks. Well, it won't be a peak if today there's a higher high above Friday's 1565. But there are a lot of signs here that are saying to me, and one of the reasons why we are long this particular the volatility index is because it looks to me like the weekly chart has really turned the corner. And because of it, we're going to be seeing something very important in the next 2 days, certainly by Friday. Now, we've got a new programming here. We've got Steve Rhodes at 1 o'clock, the Trader's Edge. New time. Fabulous time to have it right in the middle of the session. That's exactly when you want Steve's analysis. I hope you had a wonderful time in South Africa. And welcome back, Steve. So I'm looking forward to hearing what Steve has to say. And great analysis. Dow's down 51, S&P's down 7. Comp index is now down 29. I don't know what Apple, I think it's 1 o'clock they start saying things. I don't think Apple's even an issue here. There's nothing that Apple can do to change things unless it's a spectacular announcement. The VIX is the most important index right now. The VIX and the interpretation by the market of news, whether it's good news or bad news, I suspect it won't be good news, and that's what we're looking at. So as we're about to wrap up here, let me just say the VIX fails if it goes back, it's at 1523. If it closes under 1450 or 1430, that's support. That'll be a 1416 is the 9-period moving average. That'll be a big negative. Watch this closely. And there are a couple of things that we will look at tomorrow. I want to see how we close today. But as I say, if you're interested in my opening call, just an incredible amount of work I did over the weekend. Monthly charts using Elliott Wave, monthly charts using my measured move, monthly charts using the Chapman Wave methodology, just a whole bunch of things, as well as the VIX and as well as some other aspects that we were looking at. And I have to tell you something. This is a very important follow-up week to last week, because last week's information that it gave us at the close, we've used, and so far it's invaluable. Let's see if there's a follow-up this week to the downside or a turnaround to the upside. So I'm waiting for the chime to ring and for us to introduce Steve at his new time, 1 p.m., the Trader's Edge. Very exciting. And let's see, one other thing I wanted to look at here is, yes, there are a couple of stocks. I didn't have a chance to do it, but I definitely will tomorrow. I want to look at some of the IBD top 10 or 15 stocks and discuss some things about them, how they're all making D's and E's to the upside in the daily charts. I'll be back tomorrow. Have a wonderful day, and welcome, Steve, to the new time.
O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.